New contract month, NQU 2024. This week has currently traded and printed all-time highs at 20,371. We have an open imbalance in the form of a buy-side imbalance, sell-side inefficiency. We also have an order block. This is on a weekly time frame between 19,255 and 19,115 in the quarter. As you can see, we've created all-time highs. Obviously traded above the prior week's high. Before then, we spiked maybe 5% into the prior week's trading range, and we closed at 20,009.75. Not a lot much to see here. I mean, you could go ahead and say, yeah, this is coming next, but I mean, this is the weekly time frame, guys, so it's going to take quite some time to pan out. You know, as a scalper, you want to get the higher time frame bias taken care of, so that when we go into lower time frames, it's much easier to take. It's not only easier, but it's much more simplistic in finding the setups that suit your strategy. If you know that there's a good chance for the market to continue to the downside, then you know that only looking out for short setups is going to be highly profitable for you. So if you was to have a look at the daily time frame, we can see that the Thursday's candle ran on buy stops. I ran on buy stops at 20,271 in a quarter. 100 handles before closing below the prior day's low and into this imbalance right here. As you can see right there, I'm using my crosshair right there, so look at how accurate that is. 19,959, 19,958 and 3/4 and a quarter. So just lower than that area there. We gapped and opened right there. We spiked up into that area, created an imbalance. We ran them by sell stops, taking that low out there, which is the Thursday's low, the Thursday that has just passed, and closed within the prior day's wick, which is at the consequent encroachment. Now, if we're looking for a continuation, or should I say, put it this way, where would majority of the pain lie? Would it be to the upside, or would it be to the downside? Because we've got the consequent encroachment of this week right here, which you could run on, but then we'd only be running on one form of buy stops, because it does look bullish anyway. So everybody is betting on price going higher, meaning that those who are placing their stop losses would place it below prior lows. So if it's going to continue to go to the highs, this Thursday's candle would signify that there's a good chance that the high is already in for the short term. So we could run high, retrace, take these lows out, trade into this imbalance in price. You see, on ES, I've used the fib to map out the dealing range low to the dealing range high, so I'll do the same for NQ as well. 19,780.5. My first area of my first area which I'll be looking to take profits when taking shorts above this area here. So anything higher than 20,086 to 20,127, looking to take shorts into 19,780.5. First point of interest, and 19,760.5 would be my second point of interest. And going into the future, this imbalance, filling in this imbalance, 19,510.25, then finally resting. I mean, if it was to get a massive down close candle, then we'll be looking at this order block here, which is on a weekly time frame, between 19,224.75 and 19,115. So yeah, with that being said, I'll quickly go into the hourly time frame. It's very similar to ES. I'd like to see something like this pan out. One, two, fairly no imbalances here as well. I mean, into something like that, and then you could sell off trading right below 19,904, the hourly lows going into 19,760. This is what I'd like to see play out. Could probably go deep into a discount. Prior lows. Yeah. This is an overly simplistic way of looking at it. The narrative. Bias is short, but the narrative is running on buy stops and targeting high time frame discount arrays.